here's a chart of the daily Dow. And one of the things that you'll notice in terms of this area here on the chart, on the daily chart, is the fact that we are not trending really in any way right now, in my opinion. On this chart, sure, certainly we have the bullish momentum carrying us higher up into what could very likely be a whole mess of bearish pressure waiting. And conversely, if we do head down, I'll talk about the bullish support coming in areas like this and this. Okay, but this is a non-trending market right now. The Dow does not have clarity in terms of any organization of a bullish trend or a bearish trend. What that means is, as we head up higher into this area, since that's the area in play, this resistance area, as we head up higher there, what I like to do is I'll go ahead and activate the stochastics. And with that, you'll see the overbought reading. Now, we were overbought last Friday as well. Let me open up this chart. Let's zoom in a little bit more. You can see this wick right there. Now, we were overbought Friday as well. We remain overbought as we head up into the same high that we established on Friday before the sell-off. So this is where, again, I would expect the selling pressure to come in. One, because it's a ceiling that has proven itself many times since back late October. And because the market is not trending, my expectation is going to be that as we head back up into the ceiling, because we don't have the strength of that organization of sentiment and momentum, in other words, we don't have a trend, I'll expect exhaustion in this area. And that's why I'm using an oscillator like a stochastic to help me confirm that overbought environment. Now, I'm not going to put a tool like this or even a strategy like this to work on charts like the dollar or crude. And let's head on over to the dollar. I mentioned that I would not put a fading strategy to work. That doesn't mean I'm going to ignore prior ceilings. That would be ridiculous, especially as we head up into the 80-decade level. But notice that we have been maintaining the green grab candles, which for the daily time frame means we have organization of sentiment and momentum, and that has culminated into not the prettiest looking wave I've ever seen, but certainly a wave that is heading up more in kind of a shallow 2 o'clock angle, just clinging to an uptrend on this daily chart, which means that when we pull back, my expectation is going to be that market participants as a whole will look to position themselves at support, as opposed to a downtrend. For example, let's jump on over to the Euro-US dollar here because I just want to contrast this for a moment. So here's the opposite of that dollar index move higher. Notice that in a downtrend, and take a look at the red grab candles, organization of bearish sentiment and momentum, and the culmination of kind of a 4 to 6 o'clock downtrend. On those rallies, it's my expectation that traders will be more comfortable positioning themselves at resistance. Now, of course, the fundamentals that are surrounding the Euro-US dollar right now make it a little difficult to just purely trade from a price and charting basis, because I have to recognize that any headline coming from abroad could push this market up higher. But using my philosophy, a chartist's philosophy, a chartologist, that's what I call myself, philosophy of the fact that fundamentals and news are already priced into, or are priced into the chart that we see, the visualization of the chart that we see. Last week when we rallied, I actually shorted this market 3 times. Every time we nailed the 20 period simple, 34 EMA, that area, I was short. So I'd love to see the 20 period simple, which is this silver line here, kick in and act as near-term resistance. And because I've shorted from these areas up here, even though it's moving up higher, I'm break even to ahead on every one of my positions, but I'd really like to see the floor give. And the floor that I'm looking at near term is the 33.60 area. In fact, this low here was 33.62. That's really where I think we could see an acceleration down to lows around 32.58, 32.60. So I'm not going to have any kind of expectation of a brand new low. That's not my intention here whatsoever. But I do think we could test other recent lows. I have no expectation or even necessity for this trade to have to break down through 31.44, this old low back from October 4. That's not the goal of this entry short. Just would love to see, again, near term, the near term support from this low, and then maybe a test of this low here. That's all I'm really looking for. So with that in mind, and kind of pulling together that look at the US dollar, again, the whole thing is about understanding that dominant trend and trying to determine where traders are going to want to position themselves. I think still in the dollar, they're going to be comfortable positioning themselves at support until or unless we get up to this area up here. Same thing goes to that Euro US dollar. I think they're going to be comfortable positioning themselves at resistance until we start testing those two lows that I pointed out. So think about the approach to the Dow that I'm taking. And why is that approach so important? If risk appetite leaves, then my dollar index will continue to move up higher. And the Euro US dollar should in turn continue down lower. And if the dollar heads up higher, that should also bring commodities down lower, affecting my Aussie trades, affecting my Kiwi trades, affecting my dollar Canada. Just be aware that right now there are geopolitical tensions that are affecting crude that could override strength or weakness in the dollar.